Hello, I'm Chris Sarley, Investment Research Analyst at Fund Calibre, and today I'm delighted to be joined by Richard Parfect, Portfolio Manager of the VT Momentum Diversified Income Fund. Thank you for joining us today, Richard.
You're welcome. Good to see you, Chris.
Let's start with the fund itself. As the name suggests, the Diversified Income Fund can hold a range of assets, the likes of UK equity, property, and specialist investments. Can you tell us a little bit more about these different types of investments?
Sure. So as you say, it's various assets within the fund. UK equity is essentially direct equity in the UK market, which is predominantly FTSE 250 companies, so mid caps. Some of those names may have in the past been on the FTSE 100, so large caps, but for one reason or another, they've fallen within our universe. So that's predominantly UK, which is direct. In overseas, we use third-party funds, which are invested at either a region or a country-specific level. And so they are run by specialist managers who are obviously experts in those geographies and those companies that they're invested in, because we don't have expertise internally to do that. On fixed income funds, is about 30% allocation to the income fund. Again, that is third-party funds, predominantly short duration credit. So companies that are issuing credit with only sort of 2 or 3 years left to run. So that's why it's short duration. And so you have less risk for interest rates and inflation. And then we have specialist assets, which within that is property, so REITs, private equity, specialist debt vehicles and things that are invested in, music royalties, and then infrastructure. So 4 subsectors within specialist assets, all invested in investment trusts, listed vehicles on the UK market. And then finally, we have some defensive assets such as physical gold and gold miners and cash.
Okay. You also hold an investment trust that invests in private equity. Could you maybe explain what private equity is and how that sort of adds to the portfolio?
Sure. So private equity is, as the name suggests, companies that are private. They're not listed on a public market, but they are, in their own right, some seriously big companies out there, growing quite significantly, quite often disruptors in their field and in whatever industry that they're in, or they might be earlier stage, what you might consider more speculative, but they're well capitalized. And so what we are, and by capitalized that means well funded, funded with equity rather than by debt, because some of these companies, not all, but some of these companies may be pre-profit, and so it wouldn't be appropriate for them to be carrying debt. But essentially, they are companies that we wouldn't be able to obtain exposure to through normal public markets, other than through the listed vehicle that they're within, so the investment trust that they're held within. So one of the beauties of investment trust vehicles that we invest in is that they can hold certain types of assets, either infrastructure or private equity, that are assets that are, as I say, not listed on the market. They are private assets.
And do you think that private equity might end up making a bigger part of the portfolio in the future, or?
It's possible. We have to be mindful of concentration risk. So at the moment, we have 3 investment trusts rather, that are invested in private equity. So collectively, they amount to around sort of 6%, so about 2% each on average. So if we increased, then it would be probably through a 4th investment trust that would come on, which would have to be invested in a different sort of private equity company again. So just to ensure that we've got sufficient diversification between them.
Okay. You mentioned earlier that the specialist asset side of the fund. It makes up about 40% of the income generated now. Could you maybe talk us through that in a bit more detail, some of the subsectors you touched on earlier, and do you think that will take a bigger part of the pie in the future in terms of the income generation?
Sure. So of those four subsectors, the only one that isn't paying an income is the private equity. That provides growth opportunities. But the other three are quite material income generators. So the REITs, acronym for property, essentially, invested in, we've got 7 REITs invested in specific areas of the property submarkets, whether it be long lease assets or industrial assets or homeless accommodation, to name a few. And a lot of those properties within those trusts are on leases that are linked to inflation, which is a key attraction for us. So you're getting an increasing level of income over time, and the underlying asset value should accrete as well alongside inflation. Similarly, with infrastructure, we're holding real assets that are generating income streams that are completely disassociated from the economic cycle. Quite often, the availability-based revenues, which are regulated by bodies such as Ofgem, and so very long duration assets, again linked to inflation, and own assets. For example, the Thames Tideway super sewer being built underneath the Thames River in London is a huge project, which is a consortium owned by one of our trusts, International Public Partnerships, and that asset wouldn't be anywhere near the public markets. It's a private asset, but it will generate income streams for over 100 years into the future. And then we've got the specialist debt vehicles, which are a bit of a sort of a collective name for various things such as music royalties, collateralized loan obligations, and UK mortgages. So a bit less inflation linkage there, but usually they have a higher level of income being paid today.
And just lastly, could you maybe give us your outlook for income in the next 12 months?
So we expect it to be growing. If we look back in the COVID crisis, there was a modest reduction to income. That has now been recouped. We're now paying dividends that we're receiving dividends that are at least as high as they were pre-pandemic. And so as inflation accretes upwards, we should see quite a number of our specialist asset type investments increase their level of income as inflation increases. And also a number of companies that had left the dividend register within UK equities, such as Marks and Spencer's, is now seeing some decent growth within their business models and could indeed return to the dividend register. So the income generation is getting better going forward.
That's great, Richard. Thank you very much for your time today. And for more information on the VT Momentum Diversified Income Fund, please visit fundcalibre.com.